live and we are rolling. Let's get into it. Let's get the links sent here first and then we'll jump right on into it. I appreciate everybody who is watching the replay. Thank you for watching the replay. And then let's get into the Discord here. If you guys aren't already part of the Discord, go ahead and join. I'll put the link in the description later. You can go to nqsignals.com and join as well. Join that for free. And then from there, you can join the Discord. There's a button there. You just click it. That'll join you. But all right. Let's give it a second here. Let's go through some of the questions that we have submitted. And then if anybody in the live chat wants to submit a question, we can do that. TA, what's good? What's going on, TA? Appreciate you jumping on. Let's go. We will get it rolling here. Let's actually edit this really quick. In a minute or two here, and we'll get to going. So let's see what we have. Again, let's get right there. Alrighty, let's go. All right, what are our questions for today? I'll make my face a little smaller for it to be out of the way. I guess I could put it over here and make it bigger. That's probably a more responsible thing to do. Huh? All right. Okay, automated strategy, that's over trading. Okay. And then this is yet last week's right here. All right, cool. Cool. If you guys have any questions, put them in the comment box as well. I'll answer those. Also, that way we can have a nice dialogue back and forth. All right. All right, so question number one, VGAPS trader. Kind of have an idea who this is, but you mentioned automated strategy. What is that going to look like? How to use it for prop firms? So the automated strategy will be automated, front end and back. So entries and exits, which is what an automated strategy is. What's it going to look like? It's going to be similar to the volume gaps. It'll be a little bit different as far as its entries go. I'm right now thinking that we should be able to get somewhere between 4 and 5 trades a day, more like 3 and 5 trades a day, depending on the day. So I'll be testing that. What I'm looking for is a profit factor of 1.4 to 1.5 or better. Obviously, if I could get that, that'd be great. That's what I'm looking for. And so I won't release it until I have hit that threshold. The minimum threshold I want to see is at least 1 year. So 1 year full back test. Let me see all the trades. The win rate doesn't really matter too much because it can change with the risk reward ratios. But I do want to see a 1.5. Then I want to see a 2 year back test of at least like 1.3 and a half. And then a longer back test from that should be about the same. So that's about what I'm looking for. I don't want to have a strategy that only trades one time a day. Not enough volume. If it's good enough, you should be able to trade more. So that's kind of what I'm thinking. Obviously, it's going to morph over time as it improves, as I'm making it better. A lot of what the strategy is, and maybe we'll talk about this later, but a lot of what the strategy is trade management, not necessarily like when to enter and when to exit. A lot of it is, okay, like how do we want to enter and what ways do we want to enter? What type of position do we want to take? Do we want to enter or exit with partials, or do we want to enter or exit with full amounts? Do we want to enter with half and then add later? Like there are different ways to manage trades, and so that's something I'm playing around with because the more you change that, the different results you get. So you want an equity curve that looks like this as best you can, like it's kind of like a straight line. A lot of times it'll look like this is really bumpy, and ideally it's going up. What you don't want is like up, down, up, down, up, and then so you want to avoid like big losses. And so some things I've done are like no trading at Central Time, but basically no trading during power hour, no trading after the U.S. stock market closes for that 1 hour where futures are open, and so trading begins. It would begin, at 5 p.m. Central, 6 p.m. Eastern. So things like that can really make a big difference. Taking out like no trading from 8 a.m. to 9 a.m., huge jump in performance as far as win rate goes and profit factor. So things like that. Now, could I use it for prop firms? This is a really interesting question. Kevin, what's good? Really interesting question to add on to this. Part of me thinks yes. I want to say like I'm 70% sure you probably can't, 30% sure maybe you could. The reason I think you probably could though, like to maybe even get a payout, would be if you had the bot going. And by the way, I'm only thinking about the bot with other individuals using it. Obviously, you could trade with a bot on every prop firm, and as long as you're the only one doing it, you'll probably be fine. I don't know that there are any prop firms out there who are going to deny you a payout as long as you follow the rules. It's when there are dozens of traders taking the exact same entries, exact same exit, that payouts start to get denied. And so what I think is probably going to make sense is you would have the bot going, and it would take, 3, 4, 5 trades in a day. And ideally, you'd be able to squeeze in a couple trades in between its trades, right? So you'd be able to go ahead and get in there and take a few trades on your own. And so there'd be the bot trading and your trading. Now you might want to go like micros or like one micro, or trade a mini and try to make $100 or so, or you might even lose $100. It really wouldn't matter too much as long as you were taking trades inside the account. So that's kind of what I think. I'm going to have to test that theory a lot before I'm comfortable saying that it can be used in funded accounts. But for evals, you could just set it and forget it. And then obviously for your own funds, like that'd probably be the best solution. But I do think that maybe with prop firms, we could get away with it because I just don't know that any of these firms truly care that much as long as you're following the rules and you're not doing anything crazy. And a lot of firms do allow you to use bots too. So it's not like it's the end of the world if we did use one in a funded account. But let's say you had a funded account and you had gotten a few payouts. You might not want to add a bot to that prop firm. Might want to go to a different prop firm and start up and use a bot there, if that makes sense. So that's a big, like, we'll see. That's a big we'll see. I've been liking London Session for NQ, but it's very manageable. Nice TA. I like that. TA, what strategy are you using? And how many points are you going for? Again, I want you guys to go back and forth with me in the comments and in the questions. I would love to answer more of that. How do I stop over trading? So this is a common one. I see this with a lot of traders who have success and then they keep trading and then they lose all that success. How do I stop over trading? So one of the things that I do is I try to like have a window where I'm going to trade. And so like for me, for example, I'm Central Time. So 9 a.m., 30 minutes after the open, I trade for an hour to an hour and a half. Usually it's not longer than that. It could be 2 hours, but typically it's not. And so once that hour's up, like I'm done. I'm done trading. I'm gonna do something else. I'm gonna make a YouTube video for you guys. I'm going to answer questions. I'm going to go work out. I'm going to do any number of things that is not trading the markets. So how do I stop over trading? It's doing that. Now, in that window, I also at times overtrade as well. So how do I prevent myself from doing that? Is flipping between accounts. So instead of like, it's rare that I have an account that gets blown in a day. I haven't blown up an account in a singular day in a long time. And the reason for that is, let's say I'm in an account and I'm trading one NQ contract. If I'm down $400 in that account, I'm just going to move on from that account. Like, I'm probably not going to get all that back, especially if the ATR is lower than like 10. It's like, I'm not going to get all that back today. So I might as well just put this account down, jump to a new account. Now that new account, I don't have that same bad habit of like, I got to get the money back. That account's basically at a zero, but it should be at a zero P&L. And so I can then restart fresh. A lot of times over trading occurs when you're down or you're trying to get to your profit goal. So if you're down, just jump to a new account, start fresh, and then you can go back to basic fundamentals of your strategy. If you're trying to get to a profit goal, I would tell you that's a stupid thing to do. Top Step has $150. My funded futures is $100. Alpha Futures is $200. And there are other firms out there that have you have to make X amount of money in X amount of days to get a payout. Those goals are fine, right? Like to get over a payout, but you shouldn't be trading $200. You should be trading to catch the right move. And then once you catch enough of those moves, then you are done. For example, today, I had one I had a losing trade. I had a small, shoot, I don't remember what it was. I think I had like a break-even trade. Then I had a trade where I made $40 or so. Then I lost 140 and I was down 90 or something like that. I was down 90. And then I think I had another loss. I was down like $200. And then I had a win that put me up $40 or something like that, or $90 or something like that. I'm getting the numbers confused, but I was down off of 2 losses, then I was back up, and then I ended up hitting another trade. So I wasn't necessarily over trading, but once I hit that goal of like, okay, I'm above X $200, then I am done. I wasn't going for broke on that one. Today wasn't the day for that. Then I jumped to a new account, and that new account maybe was 3 or 4 trades, maybe, and then I was done with that one as well. So I think that over trading comes from 2 things: a profit goal, which you should just be trading your setups, and then if you are down a certain amount, dump to a new account, or you're trying to like get back losses, and you shouldn't be doing that. So just get to a new account. So if you only have one funded account, get a second one. Way easier said than done, I know, but get a second funded account. If you can't do that, then just jump to an eval. Go from funded account to eval. You should be warming up. So in the demo account, taking a few trades, and then from there, what you can do is jump to a funded account or jump to your evals, whatever you have, and then you trade from that point. So over trading is just a mentality thing. It has nothing to do with anybody's fundamentals. I don't know anybody that has a strategy that requires them to over trade. It typically is just between the ears, and there are a lot of different ways we can do that. Primarily it's schedule. So if you're trading beyond your schedule, like you know better and only the bad things are happening. Like I remember I had a coach when I was in college playing football, and all grown men probably say this, but like nothing good happens after 10 p.m. at night, right? Like there's like nothing positive is about to happen. So don't leave your house, right? Expecting to go somewhere and do something with Lord knows who, doing Lord knows what. Like nothing good happens after 10 p.m. Nothing good happens after trading past your trading window, right? Nothing positive is going to happen. You might get lucky, but there's a 90% chance you're going to lose more money than you already have lost, or give back gains that you already had, which is stupid. And then you'll be mad, then you have to try to re-get that back, and then it's a snowball, blown account, right? So over trading, just move on with your day or move on to a different account. That will certainly help it. Tia said, I made my own strategy using MAs for long trends, EMAs for short trends. Okay, along with gaps. I go for 5 to 10 point scalps, then trail aggressively. Nice. I like that. I like that strategy. I trail aggressively too. I am in agreement with that. Today I trailed a couple trades too aggressively, left some money on the table, and I also didn't put my entries at the right spot, and I ended up giving back. Or not getting into trades that were money. I had like 3 or 4 of them that I could have made. My accounts could have been up like $800 instead of just $400, $450, whatever it was today. I could have been up double, but I just missed a few entries, which I have to get better at. When will the automation, I'm going to highlight the ones that I've done already. Like gray? Gray's cool. All right. That one? Yeah. Gray sucks. Gray's just a shit color. No offense. Just is. Let's do like a red. Red's better. Light red. All right. When will the automation be ready to use? I don't know. I don't have a set time frame for this one yet. The full automation, that is. The semi-automation is ready to go right now, but the full automation will be ready to use, I think, in the next week or two. Getting the strategy from like not good to pretty good is, I would say, moderately easy. Getting it from like pretty good to really good is the hard part, right? And it's typically like one of 3 or 4 different things you have to do. And so I have to come up with those ideas, test them, try them, and see if they work short-term and long-term. So I would say a couple of weeks. I'm not that far away. There are a few things I want to try and test. I'll do some brainstorming to come up with a couple things, but probably the next couple of weeks. What I want to do is test it, make sure that it actually works and runs and hits profits and whatnot. And then we'll probably try and use it in a funded account, and we'll see what happens with that. I have an Alpha Futures account we can use on it for that. All right, so that kind of takes care of that. A couple weeks, I would say. We'll see. It's a VGAP trader, I guess. Wrong red. One more down. There it is. What's the future of NQ signals? That's actually a really interesting question, because I was talking to one of the developers who helped me build it yesterday. And I really don't know. The way NQ signals is constructed, it's going to give you signals every time frame that you choose. 1 minute, 2 minute, 3 minute, or 1 minute, 2 minute, 5 minute, 10 minute, 15 hour. And then you have the Iverson, which is every 2 minutes. TA, I appreciate that. NQ Signals is, I think, a really good start, but for it to be as good as it needs to be, it can't give you signals every minute or every 2 minutes or every X amount of time period, right? Like every candle is probably way too much to try and ask for moderate accuracy, considering that price will do a certain thing, but it might take 2 or 3 candles for that to happen. And so the future of it is I'm not sure yet. I do think that as AI gets better, as machine learning gets better, as these things come down in cost, as these things come simpler, I do think there's an opportunity where I could get back into NQ Signals, modify it a little bit, and then start to really spit off signals from there. I think that there's something there. But for right now, I think it's just a cool, like, free thing. You can use NQ Signals if you want. You don't have to, but nqsignals.com, make an account. It's completely free, and you can just use it. So it's not going anywhere. It does cost me about $200 No, it costs more than that. It costs $40 times 4, 160. Probably about $300 a month to run that thing. So not super expensive to keep going. So it's not a big deal. I don't mind having it out there. You guys get some value from it, so that's great. But I don't know what the future is yet. As AI gets better, we'll see. But I think that the way it's currently constructed, it's probably not going to be used beyond what it currently is. I'll have to redesign it for something a little bit different. So probably take more trades, or take less trades, and take trades that have a specific strategy aligned to them. So basically, like, take a strategy and then have AI grade each signal and then train it to grade the signals more accurately. It's probably a better way to do it. But that's just it's gonna take a lot of man hours and work, and we'll see. I haven't given up on it yet, but it's not my main focus right now. It's gonna hang out in the background until it gets easier. I got almost 1,400 people using it, which is great. Or I have signed up for it. I don't know how many people use it daily, but people have signed up for it. So it's growing, which is great, but certainly not where it needs to be just yet. So I am brand new to trading. Where should I start? Okay, so well, start wherever you want. What I would say is if you're brand new to trading and you found me, so you found futures, what I would say is you go to TradingView, you set up an account, you set up a free account, and then you set up the trading panel so that you can take a trade on your phone or on your computer, and you just start trying things. Start paper trading, and you start going long, going short, going long, going short. And so just see what happens, right? See how much money you can make in a minute, an hour, and whatever. Trade with 10 contracts, trade with 1 contract, trade, MNQ, trade NQ, but just see what happens. Okay, you're not going to be very good. You'll get lucky a few times. It's fine. But just get in the rhythm of trading. Try to find a schedule where you can look at a chart, take a trade, look at a chart, take a trade, exit the trade, and then, see if you made any money, see if you lost any money. You don't even need live data. That sounds backwards and weird, but you really don't even need that. Just start doing it. And then as you get better, you'll say, okay, maybe I should find a strategy. And then you'll have a little bit of comfortability with the platform and how to take trades. And then from there, you could probably apply something. So if you're brand new, you've never day traded before, just get TradingView, get a free account. You don't even need the data. Don't worry about that. And just start clicking buy and clicking sell and just get used to it. And you're going to be like, oh my God, I can make thousands and thousands of dollars every single day. Yep, that's the opportunity. Not very likely, but it's the opportunity. And then from there, what you can do, start to find a strategy that works for you. When can you trade? How much money do you have to risk? Should you use prop firms? Probably. Which one should you use? Take a look around. Top Step is great. Alpha Futures is great. My Funded Futures is great. Apex is okay, but when they run a sale, they're great. So you can use a different prop firm there, but just start taking trades on a demo account. Just see what happens. Give it a shot. You have nothing to lose and a whole lot to gain by just trying. I wouldn't start with trying to find a strategy or anything like that. No sense in doing that. How should I use the volume profile? It's a little warm in here. Feels really good, actually. Okay, how do you use the volume profile? Should I use it? I think you should use it. So I like the volume profile a lot. This is one thing that has grown in my trading, is using the volume profile. The volume profile, we've talked about it probably every live stream we've done for the Q&A, which is it measures volume horizontally. So it measures volume where it makes sense. A simple analogy would be why the volume profile is so effective. Imagine you have a neighborhood full of homes that are being sold. Okay, most of the neighborhood is up for sale. Normal volume measures volume per candle. And so It would be like if you measured the amount of homes that were sold per day each week. So like on Monday, like 2 homes sold. On Tuesday, no homes sold. On Wednesday, 1 home sold. On Sunday or Saturday, 7 homes sold. On Sunday, it was 5. And then you're looking at this data thinking, okay, so Tuesday's a good day, Saturday and Sunday's a good day, Wednesday's not a good day. It doesn't really make sense. Like you would never track data like that. Do you know what I mean? What you would rather do is you would track what the price was that they sold at. So this home sold for $500,000. This one sold for $700,000. This one sold between that, $650,000, whatever it was. This home sold at $300,000. And then you would look and compare. You'd say, okay, this home sold for cheaper because it has less bedrooms, less bathrooms. It has less square footage. This one sold for more because it has way more amenities and it's also larger, more square feet, more bedrooms. You would look at the price that these homes sold rather than like what day they sold. Because what day they sold is pretty much irrelevant. It doesn't matter. Like if I put my home on the market on a Tuesday, I'm not going to guarantee and sell it. Because I have a showing on a Saturday or a Sunday doesn't mean I'm going to sell it. Doesn't mean I can't sell it on a Wednesday. So the volume profile just tells you where people are buying, right? Where are they buying and where are they selling? Where are they transacting? And then from there, what you can do is you can look at where they are transacting the most and least. And the least areas are where I like to specialize and focus my time on. So I look at a volume profile, and the volume profile has these different nodes that go out to here and here and here, and some go out to some are back here, some are out here and here and here. And then from there, you're looking for the areas where there is a little bit of volume. Basically what that is a price is basically a wick touch. So price comes down, it touches it and runs, or it comes down, touches it and goes up, right? So it's typically a nice support or resistance level. I like to put my entries at those levels. Those levels are very strong because prices want to be there. Think about it like this. Let's say you have a house and your house is worth $500,000, but you put it on the market for $1 million. Well, if you put it on the market for $1 million, no reasonable person is going to buy said house at $1 million when it's worth $500,000, right? So when price goes way up, it's like, okay, we're going to go ahead and sell right here. Price is it's not going to go higher. It's going to come back down to the median where it should, $500,000. So we would sell that and we watch price, the listing get cut from 900 to 800 to 700 to 750, or 750 to 700, 600, 550, 500. It came back down where it should be, right? On the opposite side. So that would be like price going up and then coming back down. So it touches our point, runs away. On the other side, let's say we had a house where it's worth $500,000 and it went up for auction for whatever reason. Well, there can be a ton of buyers at that level. So price comes down to $100,000. It is going to be met with a ton of buying at this point and bounce right back up. And so that would be a case where price then too would go down, bounce and go right back up. And so we want to take a trade at that level again, right? We want to buy at that auction all day because that price is worth more than what it currently is. So the volume profile simply allows you to see where people are buying and where they are selling. And really you can't tell who's buying and who's selling. I don't like that it even like remotely says that you might be buying and selling. There might be buyers or sellers, or more buyers or more sellers. Just know that there are transactions happening, right? Because a person who has a trade that shows a sell could be in a new sell position or selling to close their long position, right? But both count as a sell. Both tick as a sell order. You don't know if it's an open order or closed order. And since we don't typically know that, and we don't want to try and track that and trade that way, don't worry about it. So you see a level where a transaction's happening, the lower levels is where I like to trade, and then you can find those lots and hit them. Now, how I use this specifically is I also use a moving average. So in today's trade stream, which is up right now, and yesterday's, I don't know if I lost more than 3 trades. I lost like 5 trades between all the accounts, and I don't think we were profitable all the days, yesterday and today, obviously, but I think I only lost like 5 trades of maybe 30 trades or something like that. Might have been maybe a little less trades than that. Anyway, what we want to do is take trades on the side of the trend or momentum. So if I'm using a 50 or 100 period moving average to identify that, if price is above the moving average, then I'm taking longs. If price is below that, I'm taking shorts. And so today we took longs. Basically what we wanted to see was price move its way up. And then when it came down, it was curling back down. I wanted to find where there were very little transactions. Like where was price bouncing consistently? Or the volume nodes is what it is on the volume profile. The nodes, where were the lowest nodes? And so we were able to catch quite a few really good trades and that moved very fast using that simple strategy. So that's what we did for the volume profile. That's how I trade it. And it's very consistent and it wins a lot. So you have seen by a lot of the VGAP traders. So let's go here, write that one up. All right. What trading books do you recommend? That's a good question. I have never read a day trading book. Not one. Never. And it's not because I think they're all shit or anything like that. I just don't know that there's a whole lot to glean from like reading when you can easily just do. Like the only days that you can't do something trading are Saturdays when it comes to this. You could trade Forex, and even if you could trade crypto, so you can trade every day. So there's actually no days of the year ever, and I guess forever, that you can't trade. So like there's a whole lot to learn by just doing rather than like reading about it. There's a book. It's a sales book, but it's called You Can't Teach a Kid to Ride a Bike in a Seminar. And the premise is like, I can't teach you what to do. You have to just go and do it, and then you will learn with your experience, right? And so, exactly. TA, you're on the money. TA said, no one ever learned to swim by reading about water. Bingo. Like, there's no way. So when it comes to the trading books, if you want to buy investing books, like totally, Benjamin Graham has a good one. It's outdated, but the philosophy is okay. You can't really use it, but like you can see how he thinks. Anything written by Warren Buffett's fine. You could just have it all summarized by GPT. Okay, I'll lie. There's like The Millionaire Next Door. Like there's that one. There's index investing. There are a ton of books on that. I remember I read one. There's one written by a lady about her and her dad's trading strategy or their investing strategy. I remember what it's called. I read it when I was, 20, I guess. But that's more like long-term investing. When it comes to actually day trading or trading the markets, a lot of it is going to be feel, and you have to go by what you understand. I am not a huge price action junkie. I don't look for patterns. I'm not looking for specific candles. It's not really my thing. I like indicators. I like looking for like the way indicators interact together. That's my game. And so that's how I trade. Some people are the complete opposite. They hate indicators, don't ever want to see an indicator. They just want to look at a chart and they want to draw their lines, and then that's how they want to trade. No problem with that, right? No problem with that. But you can't know which one is you until you do both. And you definitely can't know which one is you until you actually try it, and you won't find that out in a book. So I'm not saying books are bad because the philosophy I'm saying right now would apply to basically everything. That's not true. Trading is just so specific, and there are so many emotions and there are so many moving things happening at the same time that it's very difficult for all that to be encapsulated in a book to give you success, with the success rate of trading being at about 5%, right? Like 5% of people make money doing this. So most things you hear aren't going to be good. It's just the truth, right? Most things you hear are not going to be profitable ideas for you. And so books are tough. Now, if you have a business or you're trying to learn a specific skill, like books are great. They're fantastic. They're timeless. But specifically day trading, it's really, really tough to find a book that will help you become successful. Now, what I do think is you could be a decent trader, find a trading book, and then it might connect a couple dots. But it can only connect dots if you already have a few things like under your tool belt. You already know a few things, and then you might read a book and think, oh, that thing connected this for me. That actually does help. But that would be after you have some experience. So with day trading specifically, YouTube is going to be fantastic, and then your own experience is going to be fantastic as well. So your own experience first, YouTube second, and then your own experience third, and then YouTube fourth, right? You just keep going back and forth. Keep doing things, and then eventually you might find something or stumble across something that kind of works. But again, the odds are stacked against you, right? Trading is very difficult, and most people do not have success with it. So you need to keep that in mind as well. Why is manual trading and full automation different? So a good question here. This is a really, really good question. I'm gonna space this down here, so just we can see our questions. I can zoom up a little bit. I'm not getting confused. A little more. There we go. All right. So this is a really good question. So manual trading versus fully automated trading. Manual trading relies a lot on what is going on. It relies a lot on like timing. Full automation relies on, I'll have to take that later. Full automation relies on specific setups. And so, give me 1 second. That was my wife calling. Let me make sure that everything is okay. No. Okay, she is okay. She does not need anything important. The difference between me and my wife is I only call her if I need to speak to her. She calls me for whatever. So it's like, all right, I got to see what's going on here first. but she needs to know if I need the grocery store. We're good. Anyway, all right. So manual trading relies primarily on like your timing. So you could technically trade like a robot if you had 24 hours a day, you never got tired, and you never had any emotions. You could take the same setup every single time. Full automation is kind of the opposite. Like it's not even looking at charts. Full automation is not a chart game. Manual trading is primarily only a chart game. And so they are just polar opposites. When I'm building a fully automated strategy, I'm not even looking at the trades that are taken. I'm looking at the results. Like, is it win? Does it lose? If I change these variables, what do my outcomes produce? Like, what outcomes are produced from that? Manual trading is I need to like the feel and the setup before I take the trade. I need to agree with what's going on before I take said trade. What I have come to understand, and this is not a position that I've always held, is that manual trading and your manual trading strategy can and probably should be different than your fully automated strategy. So for example, my strategy of using the volume profile and one EMA or two, very difficult to program that because, well, the volume profile moves the nodes move all the time. And so my entries kind of shift around all the time. It's very difficult to be like, hey, you should enter on this node. To hard code that would say, okay, you need to enter on the sixth lowest node underneath the point of control, but it's okay to do it also to go long, but also you can go above the point of control. Like the setups don't always make sense when you try to hard code them with strict logic. And that's also okay. Like people make hundreds of millions and billions of dollars manually trading. There's nothing wrong with manually trading. Like fully automated trading is, I think, sometimes a little cracked up more than it should be. Like people make fortunes manually trading. But automation is like, I have this one setup that I like with this one strategy that I want to manage to trade with, and this one exit type. And it wins 60% of the time. And I just want to have it done for me 24 hours a day, 23 hours a day, 5.5 days a week, essentially. 6.5 days a week, really. Or 6 days a week. So full automation is just completely different. It's a different game. You don't even look at charts when you're building these things. Ideally, you start with something that looks okay. But it morphs into this thing that's like, okay, this win rate sucks, this profit factor is horrible, but if I change these things around, now it's really good. But that has nothing to do with the charts. You're looking at straight up data. And now you could say, shouldn't you look at all data when you're manually trading? Yes, but there are times where you could get a much cleaner entry than your automated strategy might get, and like that would be worth it. There are times where you could get out of your trades way faster than your automated strategy might. That would be worth it. Like there are tons of ways that manual trading makes way more sense than fully automated trading, but they are never really the same, right? You don't ever typically see a fully automated strategy be the exact same as a manual strategy, mostly because it's redundant. You just do one or do the other. They're typically different, and it doesn't seem like it would be, but it is. So if you, like, for example, if you traded manually a moving average cross, trading that on your own would make some sense. Like, oh, okay, like when they cross and it's nice and big, I'll take a short. When the shorter one comes across the longer one, I'll just do that. But when it's automated, what also happens is when it's manual, you'll see, okay, now they're like really close together. They're kind of interwoven a little bit. I'm just trying to wait. I'm not going to trade anything. Well, by the same logic you just had before for your fully automated strategy, it's going to be taking trades all throughout that like choppiness where the moving averages are basically on top of each other. And so like simple things like that where you would like, why would I take that trade? I would never take that trade. But the bot would, because that's the logic you've given it. So a really long answer to say manual versus fully automated are typically different, and it's okay for them to be different. For me, they are different, and that is all right. It took me a while to come around to this, but it is okay. So manual trading is different because it goes off a lot of feel and timing. You typically can't sit at your computer 23 hours a day. And then automation doesn't really even look at charts. You're looking at data, and the data determines what you are going to do with said strategy. So hopefully that answers that question. But yeah, manual versus full automation is just a little bit different. How do you handle losing days? So this kind of goes back to the over trading question a little bit. What did I just do there? So how do you handle losing days? For me specifically, I think about it like my life is not over. So I'm not gonna be homeless. Okay? I'm not out of money. But I'm also thinking about it like trading is hard. It's very difficult, and you are going to have losing days. Like, you're not perfect. If you heard somebody else say, "I have never had a losing day in my life," you'd be like, "That guy's lying. Like, that guy, like, he is full of shit. That guy." Right? So, like, if somebody else said it, "I never have a losing day," you'd be like, "All right, yeah, okay, buddy, sure." Right? But if you said it to yourself after a losing day, like, I've never had a losing day before. For some reason in your mind, you end up justifying it. So when it comes to losing days, it happens. Happens to everyone. Nobody is impervious to a losing day. Everyone has them. And so one of the first things you have to think about is, like, it's normal. My strategy is not a 100% win rate. If it was, I'd be the world's first trillionaire, right? Like, no strategy is going to win every single time. You have to, like, wrap your head around that. So on a losing day, it's more of a perception flip. Like, dang, today just wasn't the day for my strategy. And by the way, trading reversals, at times, it can feel like bad strategy because the market's just fluid. It's moving. Like, a new high gets blown through, a new low gets blown through, but it's going back and forth. Like, at times, you're like, oh my God, this is terrible. It's just not the day for your strategy. That's okay. Most days might be. Today just isn't. And so it's mostly a perception flip rather than you saying, like, I got to change everything. Otherwise, my strategy isn't going to ever work again. I'm like, no, it will work again. Like, when you lose, you lose. Okay. So nobody's ever had a perfect trading career ever. Nobody. Right. So you shouldn't expect that of yourself either. But handling losing days is a big deal because if you can't handle them for whatever reason, you cannot handle success. Because people who have success end up over trading and they end up being losers anyway. So we don't want that. So how to handle losing days, you have to walk away. You have to do something else. You have to think about something else. You shouldn't be trading at a certain size where, like, it would ruin your mood for a long time. Like, it's okay to be pissed off for a little bit, but, like, you shouldn't, like, force you to treat people differently in your life because you had a losing day. We shouldn't be trading at that much size as just a simple, way of thinking about it. But you have to be able to move on and do something else. And also understand that losing happens to everyone. Literally everyone. All right, last couple questions here. Will you interview your traders? I don't know who asked this one too. Yeah, actually, I would like to do 2. I have 2 in mind that I want to do, maybe even a third coming. So I want to do more of like I want to be better about posting on YouTube. I want to post, like, every day if I can. And so one of the ways I want to do that, I want to try to post every day for a month, and we'll just see kind of where that goes. Yesterday being the start, we'll call August 11th. I want to post every day. And one of the things I do want to post are interviews with traders. And I've already kind of tentatively asked a couple, so we'll ask a few more. But I just want to get, and they'll be VGAP traders. They can be whoever. Ideally, they're people that you recognize from YouTube as well. Maybe I can grow this thing big enough to where other people who have nothing to do with me or VGAPs or anything I do would want to sit down and do an interview. I would love to hear that. So I'd love to do that. So we'll see. We'll see kind of where that takes us. To do a video every day is kind of a lot. And so I'll probably have to incorporate interviews, but I would love to start with some traders who are killing it, who are getting payouts, who are having success, who are funded consistently. So I want to do that. I have 2 in mind. I'm maybe considering a third or a fourth, but we'll see. They'll be very, like, informal. They'll be a lot of fun. Hopefully they'll be 20, 30 minutes. Nothing crazy. If it goes longer, it goes longer. You never know if you vibe with somebody, but we'll see. We'll see what happens with it. It should be a lot of fun, but I do have some plans for interviewing traders on the back end. And if you want to be interviewed, friggin' let me know and we'll talk. We'll see what you have that's interesting, and if it's cool, then we'll talk. Not a big deal. So we'll see. But that is coming. Interviews with traders, it is coming. That's my new goal, is to post every day for a month. Make sure that we are covering a lot of topics. So there will be a lot of topics I'll cover besides just interviews. I've not followed the group for a while. What is the best way to get acclimated to the trading process? Go back, rewind this bad boy to when I talked about how to use a volume profile. I think that's going to be a really solid way for a lot of traders to use it. You can obviously still use NQ signals. Just go to NQ signals. Look at what's going on. You have Iverson in there that's telling you to go long and go short at specific levels. And then you have the more of the momentum plays with ChatGPT giving you signals every minute, 2 minutes, 5, 10, 15, hour. So you can do both. NQsignals.com. You can go there. You can also just go back and listen through what I talked about the volume profile, and then you can watch today's live stream as well. Well, today's August 12th, so you can go back to watch yesterday's. This will be released tomorrow if you're not watching live. Go back to August 12th's live stream where I took, 10, 15 trades using the volume profile only and a moving average. Looking at the nodes, where to take trades, and then from that, you should be able to glean a whole heck of a lot, and you should be able to capture a lot of value that way. All right, so that is today's Q&A. If you guys have any questions who are watching, certainly drop them right now. I would love to answer them really quick. Let's see. At Garage Trader is one of the guys I learned from. He's with Fib Master. Check him out. I'm sure he did an interview of 15 years experience. All right, hold on. I'm gonna write this down. Garage Trader 33. I got you. All right, I'll look into it. Fib Master, sweet. I will look into it. Thanks, Tia. I really appreciate you, my friend. But that will be it for the day. Tia, I appreciate you jumping in the chat and going crazy. Kevin, you as well. And I'll see you guys next week when we do it again. If you want to submit a question in the Discord, I have linked it multiple times. Just submit whatever question you want. It will end up on here as long as it's not like super crazy or negative or anything. And then I will cover it. But until then, I will see you guys. Have a great rest of your day. Don't overtrade. And I'll see you next week.